Friday. It is a happy day. The market is up because of Apple earnings, NFP, and all the other good stuff. Welcome. My name is Michael Camo. I'm Director of Content for T3 Live. I have Scott Redler here today. We have some big things to celebrate. Scott hit a major milestone in his Twitter adventure, which we will talk about in just a second. Everybody out in the chat say hi. People are starting to come in, 100, 150. Let us know in the chat where you are watching from. We like to hear where everybody's coming from, so just type in the chat where you're from. So big news today, Scott hits 200,000 Twitter followers. And Scott's been on Twitter since 2012.
Wow.
The good old days.
Always the good old days, right? Things are never going to be the same. Back in 2012, we used to walk up mountains in 4 feet of snow, and we used to buy and sell stocks with our fingers, in the air on paper, right?
Yeah. Okay, so Scott, let's wind back the clock a little bit. I don't know if you can even, I've never even asked you this, but what made you join Twitter in the first place? Do you even remember?
I think I was actually a little late to Twitter. There was a lot of traders on Twitter, and I actually, you know what? I do remember. I was actually presenting in Vegas for Charles Schwab. I would present to their active trader audience, and there were these guys from Day Trader Radio, and they were like, I guess, massive T3 fans, and loved watching me on TV during the 2007-2008 financial crisis. I was on every other week with Mark Haynes and Aaron Burnett and Pisani and all the crew. So they saw me. They're like, "Guy, like Red Dog, why aren't you on Twitter?" I'm like, "What's Twitter?" They're like, it's a platform. You could share your ideas. You could do this. You could do that. I'm like, well, I'm not really, that good with technology, but I guess I could figure it out. And then I went on, and a bunch of them like just blasted out like Red Dog's on Twitter, and right away, I think I had a few thousand followers. And then I just basically embraced the community. I love having friends around the world. I love interacting with like-minded individuals, and sometimes those have a different perspective. It's always good to hear what's happening out there. And I just embraced it. I just really just tried to be consistent. I tried to add value to the world, and it was very refreshing / rewarding, where you help people. Not necessarily a subscriber or T3 of any of the products, but just people, whether they followed me for family, because I tried to show them, what I was doing with my son Chase, starting him early, running. He did the first 5K when he was 8. I think he got the world record. You could look it up, Chase Redler world record, lacrosse, this, that. So I just, I try and just show, kind of what I do. And not saying it's perfect, because nobody's perfect, but and just show it can be done. Whether it's control what you can control, whether it's different ways to approach the market, whether it's certain ways to approach life. And I think, a lot of people embrace it, because I try and take a middle ground, common sense approach. I am the furthest from the far left. I am the furthest from the far right. I like to be in the middle and just adjust to what's happening and use some common sense and speak when I want to speak. And, people don't like what I like to say. That's fine. I feel like recently I block about 10, 15 people a day. There are some people I don't want to interact with, certain people that just, are so nuts that I just don't need them in my life. Just like in life, they say, you keep your friends close, and you don't need to have friends that suck you dry. You can't have that on Twitter either. So it's turned into a real big part of my life, where I go sometimes to a jet game, like, hey, Red Dog, I was just in the airport and 3 people came up and said hi. I was with my son, and a bunch of guys like, hey, you chased a basketball player. And it's cool. It's a life. Life is about sharing experiences with people, trying to add value, and just figuring it out as we go, because every day is a new day, every week's a new week. And, there's strength in, in numbers. And if everyone's out there to help each other, building a good community, it keeps you safe, sound, and makes things interesting.
Okay, so is Twitter different for you versus back when you started? Is it crazier now than it was back then?
It's obviously, every time I do a tweet, there's like 5 different bots that attach to my tweet telling the world how they turned $10 into $50,000 in a half a minute. No, I'm kidding. There's there's always scammers out there, and there's always impersonators out there. When technology happens, there's always bad people out there. There are bad people in the playground. There are bad people in life. There are bad people in Twitter that try and suck, energy out of people. But overall, I think, you sift through the negativity, and there's a lot of really good information on Twitter. There's a lot of great resources on Twitter, a lot of awesome people that try and add value that, some people just out there don't know. Whether it's news, whether it's ideology, whether it's rhetoric, whether it's narrative, whether it's just information. There's so much out there at your fingertips, and I really, it's been a great product. I love it. Elon took it over. I don't know what he's done with it. He's got 1,000 things going on. It doesn't feel much different. It's us. It's up to us to make it different. The type of quality content we put out there, and I do think it wouldn't be the worst thing in the world if he did charge. So this way, all of these bots that try and feed off of unknown individuals out there, maybe get removed, because it'd be a lot of money for all these these whatever you want to even call them that are looking to do harm. But overall, it's a great place for me to post charts, find like-minded individuals, interact with people through life, watch Nick games and this, that. It's awesome. But again, don't be on your phone too much. Be with the people at your table, not on the phone. But when you're not with people at your table or around you, and you're with your 200,000 friends, it makes for an interesting conversation at times.
Yeah. So, guys, once again, we have about almost 900 people listening now. So let us know in the chat, where are you watching from? Where are you located? We know we have It's from Richfield, Connecticut, our friend Cobblestone in Connecticut, I believe, but we just want to know where everybody is. Yeah. So I will say, Scott, it's interesting because I feel like you set a good example for people, because, you're always showing your son doing physical stuff. Which I think is very, very good. I think it's interesting. I went to my doctor last month and he said his son's class, they're basically all overweight and obese because they're on their phones all day. So how important do you think it is for people to be pushing their kids to get out there, living a healthy lifestyle?
I think it's important for a healthy lifestyle, but it's important for anything. If you want your child, son, daughter, pronoun, whatever it is, to learn something early, start them early. If you want them to learn math early, learn math. If you want it to be the piano, do that, drums, whatever it is, whatever you do, introduce things early. And if they embrace it, they get good at it fast, and that makes them build confidence. And that's something that goes with them for life. I do think fitness is a big part of life. It is for me. I've been doing push-ups since I'm 4 years old. I've been watching Rocky since I'm 6. I love the mantra, of against all odds, going that extra round when you don't think you can, standing up and having the will to move forward versus, failing on the floor, in a fail forward, which is not failing if you get up and you learn. All those things, you teach. A lot of it happens through sports. A lot of it happens between trial and error. A lot of it happens just through life experiences. So the more life experiences you give your child at a young age, the more you see where they gravitate towards, and they can start early so they can excel and build confidence and have it go with them with whatever they do later in life. So I just tried to show what I did early, wishing that I did it early, and it's been awesome. Now it's not just all about fitness. You have to do well in school. You just have to take pride in with whatever you do. And if you take pride in with whatever you do and you love it, you'll do it well and you'll excel at it. And that should give you a nice halo for other things, because confidence is where it starts, and it starts with discipline and starts with success. And you don't have success unless you try things.
Yeah, discipline leads to everything good in life. I think that's a good note. Okay, so everybody, we're going to get to the charts in just a second, because I can see Scott is getting itchy. He needs to show us those trend lines and everything. But before we do that, write in the chat, because we're going to stroke Scott's ego a little bit today, because he's done so much over the years. So let us know in the chat, what's the biggest thing you will learn from Scott? I suspect we're going to hear a lot about moving averages and mindset and discipline, but let us know in the chat, what's the biggest thing you learn from Scott. Let's pump Scott up a lot, because he does a lot of work for us. And with that, let us go to the chart, Scott. What do you got for us?
Well, this morning, if you do remember, early in the morning, by the way, I've been up since 3:30 this morning. I do get up at 4:45, but my wife is celebrating her 50th with a bunch of women and having a great time in Europe. So I had to readjust, just like we readjust in life. So I got up early. So this morning I put out this wedge formation showing kind of the series of higher lows and lower highs. And I'm like, hey, Apple delivered, Amgen delivered. If we get some kind of soft jobs report that doesn't throw a curveball and rates come in, chances are we could break above some moving averages and break this wedge to the upside. So here we are in the SPYs. I know for me, today was probably one of my best days in a while. because of Apple and because I took some spies and because I navigated pretty well, and here we are. We broke above this area. You have a nice gap. If you've learned about gaps, if you hold a gap and not fill it, it usually digests and you trade in the same direction of it. Same thing with the book that we put out there about pro earnings gaps, which we'll get into with Apple. And I mapped out areas. What would be an area to get through, which was 510.75. Where would some big resistance be, which is where we broke down from, right around this 512 and change. And now coming into next week, we'll see, do we digest and continue? All in all, if you do remember, I think it was 2 weeks ago, we were minus 65 in the oscillator. We were almost 5.5% off the highs. I was like, guys, I'm putting my wife's blood in the street account to work. That was a great spot to put some IRA money. If you guys don't trade actively, a great spot to put some money to work. We're about 150 handles from there. And it was also just a great spot to cover some shorts. And if you did so, it's been very tradable, and from here on in, we'll see, what happens. But overall, we have 508.56 to trade against. The more we hold above this next week, the higher the probability we take this out. And then we'll start mapping out some levels above. And that's what we'll do. We'll map out levels, and we'll follow the leaders and we'll look for clues, and we'll work on our mindset so you can execute fast with confidence when things trigger. And that's the key. It's about doing your preparation, having your mind right, so when things happen and you have multiple plans, you could execute on the one in front of you.
Okay, Scott. So everybody in the chat, it's everybody was 8 and 21 day moving averages. Of course, I think that's the biggest lesson. Okay, so Scott, what about Apple? I mean, biggest story in the market.
So everyone used to call me the Apple trader way back in the day because I was one of the best stocks and it moves fast. And, remember when it was in 400, 500, 600 pre-split. So anyway, I love Apple. I have my iPhone. It's, one of the best companies in the world. And when it moves well. And for the last, 5 to 10 months, it's been in this range. So if you take a look at Apple, I personally, I took a call spread. I spoke about that in the 630 club. It's been on the alpha team for a while. The 177 and a halves. I thought maybe, it would be a better than feared type result, kind of like we saw with Tesla. We also had Tesla options. Both those worked very well. I did have a few that didn't work. So I had Etsy that didn't work. I had IBM that didn't work. But when you have a few that go 300-400%, it usually makes up for the ones that, you risked your premium paid. And now you have Apple here. So Apple gave you 182.67, which is a big pro earnings gap. I don't know how long it's going to take to digest before it continues, but I bought stock after. Okay, some people bought it after hours and did really well because they were prepared through 177.50, and now we'll see. Let it digest here, and I do think it'll continue. They have a huge buyback. If you wanted to sell Apple, you probably did already because everyone's been talking about how slow the slowdown, how bad it is. The rhetoric and narrative around Apple has been very negative. So at this point, I don't think anyone's a seller because it's just could be starting a new move. Like if you look here on the weekly, I also posted the weekly this morning. You have two descending channels, and now on the weekly we went one level. We took out 178.50, which is why I did that one. And here's 187. Chances are maybe we pause here, but I do think at some point, we get into this area, and then, you have the all-time highs. So I would think by year end, this is taken out, and, then you do the channel from 165 to 199, 175, 185. That's like 30 points. You're talking 220 to 230 measured move. But there'll be a lot of trades between now and then. But for now, awesome option play for everyone in the community. And now I am long the stock versus that area, and I'll probably look at it a little closer because I really haven't been engaging Apple the way I have because it's been out of play. It's been a laggard. I've been much more in tune with Nvidia, AI semis, etc. But for now, just like after Tesla's results, I do think that we could be a little bit more focused. There'll be a little bit more opportunity, like when the futures are down and Apple's down, playing it from red to green because of the buyback and figuring out what times. And, I do think it'll be a lot more tradable versus the way it's been for the past multiple months.
Okay, guys, let us know. Are you trading Apple? Have you been in Apple the last week for earnings, and are you winning today? Okay, Scott, I know you've been talking a lot about Amazon. In fact, you said it looks like the best mega cap tech stock now. So why don't you bring us Amazon and get us up to speed here?
Well, if you remember a few days ago, the market was like kind of wishy-washy. We weren't sure if we were going to break this series of high lows or whatnot. And then Amazon came out and they tried to sell the market that day on Fed Day, and it was really strong. So at this point, if you look at Amazon, it's probably one of the few mega cap techs that are a stone throw away from the all-time high. If you remember, we played Amazon very well up into this all-time high, but then that was when the market peaked. It just happened at a bad time. So for now, I know there's not a lot of power today because it's a bit extended from the moving averages, but I would think, if we are somewhat constructive in the SPYs and the S&P and the Qs, now, here is what's this low? This low is 185. Perhaps we hold 185-ish, go sideways, and at some point we're going to take this out, especially if the market continues to go higher, which again, I don't think we're going to rush to new highs in the S&P, but you want to find the best stocks out there that give you the benefit of the doubt to go up if you're playing things to go up, etc.
Okay. What about Nvidia? Obviously, that's been the market leader. You said today you still like it. Let me actually rephrase it a little bit. Did Supermicro does that give you any doubt about Nvidia going forward? They had just a tiny stumble, but does that put any doubt in your mind with Nvidia?
I think Nvidia acted very well, even with SMCI getting beat up. If you look at the chart of Nvidia, much different. Nvidia, I posted this morning also. I usually post one of these charts a day just for everybody, just to add some value. You have a series of low, higher, low, higher, low. When the SPYs were testing the prior day's low yesterday, this was way above it, showed relative strength the entire time. It actually took out this 888 area. Now you have another gap. It seems like, again, if there's going to be a stock that's going to show relative strength, that's going to give you the benefit of the doubt that when the market's down, you'll be able to buy something and trade around it. That's Nvidia. What you want to be is you want to be in a stock that's acting special, that if God forbid something happens overseas and the futures are down 20 handles and you're in a swing long that's acting well, you want to be able to add to it, because of the over emotion, and then play it. So now you have a gap here. This is 870. Let's put this right here. As long as it holds this going sideways, perhaps there's a whole level here. So at this point, again, I don't think the market's going to run away, but this stock is important. It's acting better. Like, look where this is versus the highs. And then you have SMCI, just at the bottom end of the range. SMCI is I don't think the story's over here, but they're burning a lot of cash. And they got to figure it out, how to, make money besides, tripling their, what they triple their revenue and earnings. But anyway, so it's just totally different. But if AMD, if this is the bottom of AMD, which it could be, remember it did a red dog reversal here. This is a red dog reversal, traded below 145, went to 142, came back above it, gave you a nice little 2-day trade. So if this is the low from 228 down to 142, and it wants to move back up, at least, I think AMD and SMCI stop being a headwind to Nvidia. But again, day by day, know your risk, know your share size, use your tier system, which we teach out there. But I do think that, over the course of the next few weeks, Apple should be a focus, Amazon should be a focus, and Nvidia should be a focus. They're on my go-to list every day.
Okay, how about the small caps? It seems like a lot of people, they're just waiting for IWM to kick in. What do you see here?
IWM has been hard. We had a really good trade to start the year, went to one of my measured moves, and this is a choppy mess. It just gapped above this lower area. I personally, I think that everyone loves to talk about the small caps and make themselves sound all smart and everything, but they're really tough to trade. They're really sensitive to every little piece of economic news out there and rates. And, this is the highs of the year, but then when you go to the weekly chart, it's like, it's kind of nowhere. Look at this Swiss cheese. It tried to break out and then just came right back in. And it's a hard sector. Listen, when the small caps are good and they're going and you have stocks going from 20 to 40 or 40 to 80, like there's a lot of money to be made there. And I love it. Back in, the pandemic went from 2020 through 2021, you could play stocks that did awesome. But for now, I just, it's not an easy sector to play. There are spots, but it's just to me, there's better spots to be if you're trading actively for a living. And if you trade in your swing trader, there's spots too, but you just got to be very selective here.
Okay, I think Swiss cheese, that might be a good addition to the Red Dog glossary.
I don't like Swiss cheese, by the way. I like mozzarella cheese. I like cheddar cheese. So this could be Swiss cheese because I'm not going to play it. I'm not going to eat it.
I mean, I feel like Swiss cheese kind of tastes like nothing.
No,
So
it's not true. It's like a bitter, like like ham and Swiss cheese is like my worst sandwich ever out there. I'll eat roast beef with a roll of Russian American. I like the Red Dog sandwich. I'll even with turkey with American. But you talk about ham and Swiss, it's the worst sandwich I could ever eat. If you ever want to, you don't like me, instead of throwing a tomato, try and make me eat a ham and Swiss sandwich.
all right, we will guys, remember, if you see Scott in public, if you have a bone to pick with him, this is how you do it.
Yeah, give me a ham and Swiss cheese sandwich.
Okay, so what else are you looking at? What else is on your mind with the market, Scott?
I feel like it's at times it feels really hard, but then sometimes we make it harder than it is. Whether it's our tier size, whether it's the amount of shares, it's whether buying it a little bit, after a move or waiting too much. I do think we're not going to run away. I think that if you recognized yesterday that some of the mega cap techs were building post that crazy volatile day of the Fed day, you would have you would have done well yesterday and today versus being too bearish on the brain. It's just like it's a long, long, long road, and it's a great road. And during the road of the market, you have to figure out, how to approach it with all these different time frames. Like, I'm 51 years old. If you're 23 years old and you just started 3 to 4 months ago, you're probably just day trading, trying to figure it out, trying to be net positive. If you've been doing it for longer than that, hopefully you're making money every month, and you probably don't have, that much money in the bank, and, you're trying to build. Then after a while you get really good day trading, then you do a day trading and swing account. Then once you're doing a day trading and a swing account, then maybe you do options. And then, maybe you're 5 years into the business, like, wow, I've been doing great. I have a active, a swing, and, and an options account. You saved money. Then, if you don't have, if you're not getting a 401k from your company, you start putting money in an IRA every month or whatever you can for retirement. And then if you have a son or a daughter, or, you start a 529, and then all of a sudden it's 10 years, you've been investing in a 529 and IRA, you have your active swing and, options account, and now you're doing a lot of things. And then all of a sudden you get a little older and your kid's a little older. I got to get a whole life insurance policy. You're doing all these things to prepare for the future as you live in the present. But Rome wasn't built in a day. So when I, on the weekends, post a weekly chart and I do my active approach, I get paid every monthly and quarterly how things look. And then my long term, I'm just trying to show you, just like starting your kids early, how long this process takes, and it's time and it's effort. And, if you do it methodically and you keep yourself sane by having fitness and eating right, and, make sure you water your lawn, meaning, you keep your relationship happy, it's there are good things out there. So look at the glass half full versus half empty, and it'll be a much better way to go through life and the markets.
Okay, Scott. So you've been obviously you've been in this game for a long time. What do you think you could have done differently to sort of speed up your learning curve along the way?
I didn't have a lot of the same resources that, everyone has now. I would just say use your resources. Like, there's so much free education out there. Use it. Back in the day, I went to the Willie O'Neill, what's it called, seminar in California. You had to go to educate and learn, so I would just say learn, listen to people, educate yourself. There's so much out there that can help you with your learning curve. Really look at your own trading. If you think you're really good at trading tech, and then you go look at your prop reports and you see how much you've lost, maybe you're not that good trading tech. Maybe it's too fast for you, or maybe you take too much size. So I think, look at your process and be honest with it, and then you could evolve your process. Like, I'm not a great short, but that's my fault. I could get better at being short, or maybe I just don't want to play both sides and overtrade. Be honest with yourself and educate yourself, and what could I have done different? Thank goodness I look back a little bit, and I don't really have that. I don't really have regrets. I feel like I've, could I have made more money in a year, or could I have had more size? Who knows? Maybe I would have lost more money. And I've seen a lot of people make a lot more money than me in this market, in this career. And I see them, out of this market, out of this career, because it's just as much money as they made, they lost a year or two later. Or maybe they made a lot of money in 2020, and then, they bought a new house and they bought a few cars, and they thought they would be making that in 2021 and two. It didn't happen. And then they got stressed out, and then they overtraded, and then, they couldn't handle it. And then they got from foreclosure, or they had to leave the business. So I would say just know what makes you tick and be happy with it. and then just then evolve it so you could always do a little bit better. But everyone's created a little differently, so figure out what you do well, what you could work on, and take it slow and steady. To me, slow and steady wins the race. As much as it's sexy to be Reggie Jackson, the best home run hitter in the world or something like that, I'd rather be Derek Jeter with on base percentage, lots of singles and doubles, and in that kind of way. So figure out who it is you want to be. But if you're swinging for home runs and you strike out 9 times in a row, you might be out of the business before you hit 4 home runs in a row. So just realize, small steps lead to firmer ground. Large steps could work, but at times you could trip. So, I'm babbling a little bit right now because it's Friday. I've been up since 4 in the morning. I want to say cheers to all of you guys who do tune in and get some value from the work that we do here. And, hopefully this can continue. And, we go through every market sequence the way it is, with an open mind, with multiple plans, and we feed the brain so we can execute and try not to look back and just always look forward. And if you're going to look back, which I do look back at charts, I love to, put up the chart and look at what happened and what did I do and, what transpired. So this way, the next time these cycles repeat themselves or these chart patterns repeat themselves, I take, I approach it better, and that's why I talk about moving averages and chart patterns and pivots and red dog reversals and all those things that are important, because, sometimes people like, red dog, I was a, red dog reversal. Why didn't you play it? And I'm like, I wasn't in the mood. And then all of a sudden it leads to a great trade. And I'm like, okay, maybe I should have done that, So anyway, you look back at prior trends, look back at prior tops, look back at prior patterns, because they're going to repeat themselves. And if you didn't, approach it well the first time, maybe the next time it shows its face, you'll be like, I saw that. This time I'm going to get it. And this time I'm going to follow my plan and I'm going to execute well. And that kind of happened.
Okay, I think that's well said. Guys, if you want to learn about, Scott's talked a lot about post-earnings gaps. If you want to learn the system, you can go to t3live.com/show, t3live.com/show. Again, obviously totally free, and you can learn Scott's style for trading gaps, which has been a big profit generator for capturing these big post-earnings moves without taking the risk going into the reports. So, Scott, do you have any final words for our crowd out there?
Just keep moving forward, keep making progress, have some gratitude for the things that you have. The small things in life is what creates happiness, and don't look forward. I've listened to some of these things say, like, happiness is, what's underneath your ground. Plan ahead, by sacrificing early, and all these things that sound like cliches are real. It's real stuff. The younger you are and the more you learn, the faster you curve. And the markets are going to be here forever. It's not the market. Sometimes the market's trickier, and sometimes there's momentum when it's conducive to a certain style. But overall, the market, is trading and fluid, and it's not the market getting you, it's you getting you. And the only way you're going to be able to embrace it and make money from it is figure out what you're doing wrong, because, the markets continue to change, but it's usually not the market that makes you lose money. It's your style, it's your system, and just know that. And as soon as you know that, the sooner you'll make changes, and perhaps you'll have more success.
Okay, well said, Scott. So everybody, thank you for joining us. We'll be back here next Friday afternoon around 2:30 p.m. Eastern time. If you want to say a final congratulations to Scott, again, just pop it on the screen. Scott just hit 200,000 Twitter followers, so he's helped a lot of people out there. So everybody, again, thanks for joining us. We'll be back next week. Have a wonderful day.